Hey, we need to talk about your behavior. We're going to talk about loss aversion, so let's get into it. Let's talk about one of the big three emotional biases that we have. Let's talk about what exactly is loss aversion and why it can really derail us over the long term, especially when we're talking about investment results and meeting our financial goals. If you've ever been to Las Vegas, or let's just think about somebody going to Las Vegas, and they get lucky and they win $1,000 and they're thrilled. It's like, wow, I went in here with 10 bucks and I'm walking out with $1,000. And let's say that person, they're walking back to their hotel room and they're just in a great mood. Again, they won a little pot of money. They're feeling really good about themselves. They get back to their hotel room, and as they're emptying their pockets, they discover that $1,000 isn't there. Somewhere between the casino and their hotel, it fell out of their pocket. Did they get pickpocketed? What happened? But that $1,000 is gone, and they feel miserable. They're crushed. They can't believe what crappy luck. What a crummy town. This always happens to me. Woe is me. This is horrible. I'll never do this again. What they just experienced, what we call loss aversion. And specifically, people feel the pain of loss 2 times worse than the thrill of gain. So that feeling of loss you have, think about your investments. And when there's a market decline, and they happen, and they're gonna happen, and you look down and your statement, you're down 20, 30%, and we can think of recent periods when that's happened. And you feel that so much worse than on those good years when you're up 10, 20%. And that pain, when it comes to your investments, can cause us emotionally to make really bad behavioral decisions, like selling after the market's gone down. Because that pain, you have to get rid of that pain. And sometimes in the short term, just selling out of your investments feels good. It assuages the pain.
Assuage. The government has tried to assuage the public's fears.
So what can happen is when we panic sell because of that loss aversion, we lock in poor performance for the long term. And in some cases, we never get back in, so to speak. And so we miss out on those potential long-term gains, and it makes it just so much harder to reach our financial goals. So we can automatically contribute to our 401ks and 403bs. And if we do a set amount in a certain time period, we're not really worried about the ebbs and flows. So the loss aversion may not hit us as bad. Another tactic you can do, another hack, so to speak, is it's kind of a way you have to reframe things. Don't look at your dollar losses, think of it in percentage terms. And I know that sounds twisted, but let's say you've been a great saver and you have $1 million in your 401k, and you look down and you're down $100,000. Katie barred the door, what do? I've got to sell out of this thing. But if instead of 100,000, think of it as 10%. Well, 10%, well, that's not so bad, right? What's 10%? Well, it's $100,000, but it's only 10%. You feel a little bit better. So maybe think in terms of percentages and not dollars. And that's just a way to kind of give yourself that mental fortitude, that chicken soup for the investment soul that you need to kind of get through these periods of loss. And if you can get through these periods of loss, you'll avoid that trap door of loss aversion. So let's recap. Loss aversion, that's when you feel the intensity of loss far more than the exhilaration of gain. What we can do about it, 2 hacks. Automatically contribute to your investments, and think of losses in percentage terms, not dollar terms. Might make you feel a little bit better. And again, we're talking about feelings here. So feeling better helps you get over these emotional biases. Now, next time, we're gonna talk about the other big emotional bias, and that causes bad behavior, and that's overconfidence. So definitely tune in for that one. In the meanwhile, I definitely wanna hear from you. And remember, as always, you can behave your way to wealth.